Okay, now let's try to see some of the bank reconciliation items and the real world examples corresponding to them. So let's see the deposit in transit case for Amazon seller. So Amazon marketplaces sellers deposits $25,000 in a sales proceed on June 30th at 8 p.m. Now bank's cutoff was 5 p.m. So the deposit appears in July's bank statement instead, right? So what will have the impact? Seller's book balance will be showing higher than the bank balance by 25,000, right? Because this seller has deposited $25,000 and his books will be showing higher balance here, right? And on July 1st, this 25,000 will start to reflect. So there may be the cases of deposit in transit. There may be another cases of outstanding checks. So Walmart issued payroll checks of $1.2 million on June 29, but some employee don't encash their check until July. So what will have the impact? Bank statement shows more cash than Walmart's books until those checks clear. It's simple, like all these checks are not getting cleared till 30th June. Then bank will have that money still sitting with it, and once the people will get that uncashed, it will get reduced. So this is the second case of outstanding checks. There may be the third case of service charges for small businesses or large businesses as well. There is a bakery in New York which sees $150 monthly account maintenance fees deducted by Chase Bank. Now this fees wasn't recorded in the bakery's books until the statement is arrived. So the books balance will be overstated by $150. Why it will happen? Because till the time the company don't know what is their exact account maintenance fees, they won't be passing the entry, and due to that their but their bank has already reduced this $150 from their bank account. So definitely their book balance will be looking at higher by 150. So this is a case of service charge which may happen in the business. Let's take the bank collection cases. So Apple company has a customer wire $5 million directly to its bank to settle a receivable. Now this customer has directly paid to the bank. Does the company know what is in their books of accounts for this? So the banks credited Apple's account, but the accounting team hadn't yet been updated its books of accounts, right? What will happen? Apple's book balance will be understated by 5 million because Apple needs to update that they have received this 5 million in their bank. So this is the fourth case of some bank collections, and these are the examples where there may be timing difference and other things as well. Let's see the example of Starbucks, wherein Starbucks wrote a rent check for $18,000 but mistakenly recorded it as 1800 in the system. Now this is a mistake which has been done in the books of accounts of Starbucks, so we call it as an error case. Now what will happen? Effectively, Starbucks books balance is overstated by 16,200, the difference of both of them. And why? Because they wrote a rent check for 18,000 but mistakenly recorded as 1800. So what exactly is happening? Their expense is looking lower by 16,200, right? When the expense is looking lower by 16,200, their book balance is itself looking higher. Why? When the expense is looking lower, book balance will be shown as higher. So if they need to correct it, they show more expenses, the balance will become corrected. So this is the case of an error. The next case which we can see is like for non-sufficient fund or NSF. So it's the example of a customer at a clothing store paid with a check for $600 on June 20th. On June 25, the check bounced, which is the non-sufficient fund, and the bank reverted the deposit. Now the store's book will still show 600 as cash because store might have thought that okay, we have received this $600 of cash, but in effect they have not received because it has been bounced. So basically the book balance will be overstated. Right now the book's balance is showing higher balance. And another example is for the interest income. So let's take about the Microsoft example. They earned an interest of $45,000 on its large cash balance. Now bank credited this interest in their bank account on 30th June, but the treasury team only records it when the statement is arriving, and if the statement is arriving after 30th, they don't know about it. So what will happen? Microsoft's book balance will be understated. They are not showing their interest in their books of accounts. So let's go through those examples what we have seen through the textbook. So the textbook examples for them are more or less similar. So let me just quickly go through them. And the case may be deposit in transit, which is like deposits recorded by company but not yet processed by bank. So bank is not showing those deposits, often because they were made after the bank's cutoff time. What will happen? The company's book balance will be showing higher and the bank balance will be showing lower. There are some outstanding checks cases, which is like checks issued by the company but yet not presented to the bank for payment. What will be the effect? The effect will be like bank's balance is higher and then the company's book balance, because these are outstanding checks, and bank these are not deducted from bank yet, so bank balance will be higher. Let's take the service charge example. Fees deducted directly by the bank, such as the monthly account maintenance charges or the printing charges. What will happen? Until recorded, company's book balance is overstated. Company's balance will be showing higher amount, right? Because they have not recorded that expense in their books of accounts. Let's see the fourth example of bank collections, wherein amount collected by bank on behalf of the company directly, such as customers' payments or note receivable. What will happen? Until recorded, company's book balance will be showing lower balance of cash because company is not aware about it. Let's see the next situation of some errors. There may be mistakes made either by the bank or by the company in recording the transaction. What will be the effect? This can cause an understatement or overstatement of balances depending on error. So there may be understatement or overstatement of errors. Then there are non-sufficient fund checks. So the customer checks deposited but later returned by bank due to insufficient fund. So what will happen? This money won't come to the company, right? So the company's book balance is overstated because company is not aware as of now that this money won't come. They have already shown that this money has already come, but this got dishonored. And lastly, there is a situation of interest income as well, whereas interest is credited by bank for maintaining the balance or investment. Now the company is not aware about this, so the company's book balance is understated because interest income has not been recorded by them as of now. So the books are lower numbers showing right now.